see if are we back up and running again? Are we up? It does not. You know what's really crazy too is that that image is gone. Oh no, that image is still there. Wait a minute. Is that image still there? Oh dude, this thing does not like hold on here. Streamlabs like totally freaked out. Streamlabs was like, "We ain't doing that today, boss." Streamlabs was not having it. Checking 1 minute trigger right now. As long as this check is good, we should continue to go higher. If not, we'll go back down and retest 507.01. Give me a quick second here, boys and girls. I got some work to do here in the background. This is the second day that I've tried to do. This is the second day that I've tried to do stuff during stream. I'm like, I'm gonna hit this button right over here. It's like, I can't say the F word. It's like, you shall not pass. Yes. So we had I don't know what's going on the website, but every time I try to upload an image, well, not every time, but I start uploading like charts and stuff to the website, it started like imploding a couple days ago. And now it's happening on Streamlabs too. So I don't know what the reason is, but and I reset my internet this morning and everything. So I don't know exactly. Streamlabs is not a fun experience in general. Make sure you've got your stops below here in this 1 minute trigger. Otherwise, we're going to go down and retest 507.11 down below here. Keep your eyes on this bread bar right now. Oh, bookmap's still frozen too. Hold on here. You know what we'll do is we'll turn it off and reboot it. Hang tight 1 second here. Yeah, I see that. See that's not working as well. Well, let me end that right there, and we'll restart that bad boy back up. Hang tight 1 second here. Thanks for the heads up on Thinkorswim or on Bookmap. Hold on 1 second here. And installing updates. Oh yeah, there it is. You guys have never seen that one? That's like an old school like me falling out of the car. Or a play on Wolf on Wall Street. I gotta change that. That's been there for like 3 years. I gotta change that shit. That computer too, just heads up. If you guys have known me for a long time, the computer that's playing that right now, that's the one that imploded. I rebuilt that thing like a Frankenstein. It's baller now. It's got everything brand new. But if you guys remember that whole thing, I like drove all over the state of Michigan trying to get it fixed in like a day. No joy for me. I finally. Oh, by the way, I finally found this like small, tiny computer repair shop, and those guys were bangers. They performed emergency surgery. It was amazing. Oh, dude, what is going on with Thinkers? Oh, dude, what's going on? I got all kinds of problems this morning. I got stuff not wanting to load here, and I don't know why. I might have to do the old school. Here, I'm gonna have to go through the Control Alt Delete death kill down here, and this is what was happening with Streamlabs. I checked out my my task manager, and I noticed that when I closed Streamlabs this morning, it was still running. So when I restarted it this morning, I had 2 instances of it just blasting in the background. We'll try this one again right now. See if we can get this bad boy going. Tesla just chugging right along on its hourly trigger. Let's see how this goes this time. SPX looks like some selling pressure coming in here. If you watch down below, here's SPX. The high was at 5096.27. Looks like the seller's stepping in once again up here. This is their favorite place to short. Dude, what is going? I got bookmap down right now. I've got the installing updates on Thinker, so I'm gonna have to reset the entire thing. Hold on one second here. I'll give it a couple more minutes and let it do its thing. If not, I'm gonna reset that computer. So just give me a second here, guys. On Thinkorswim or on bookmap. Sorry. Let's try this Bloomberg. I saw Jimmy Barry said something about you were listening to Fox Business News. They used to have some good stuff. They used to have some good stuff for their financial stuff, but then it just started becoming like diarrhea all day long. They'd like throw in an hour recorded program about politics. Like, I don't mind talking about politics as long as that's to do with the market and stuff like that on the show, you know. But like, it was just like stuff that had nothing to do with the markets. Let me check out Bloomberg really quick. We'll put that on the background. I'm gonna have to reboot this whole entire thing. I can already sense it right now. It's got like the blue circle of death right now. Let's see what we got going on here. It's weird. I tried to get Bloomberg yesterday. Let's see what we got here. I tried to get Bloomberg Plus yesterday. So maybe not. Maybe we're not going to be doing that just yet. I guess I do have to sign up. It was weird. I tried to sign up yesterday for Bloomberg Plus. And I got a 404 message that was kind of funny. Let me see if I can show it to you. Where's Bloomberg Plus? It was like the death. Let's see if I can show you guys this. Oh, dude, I didn't get the 404 error like I did yesterday from them. Looks like they fixed it. 1 second here. Turn this on while I reboot this stuff in the background. Give me one quick second. I want to reboot this this book map. Hold on here, guys.
All right, let's get to it. What do you got for stop trade?
Okay, so before you sell HP, which is HPQ, I wish they'd change that because it's HP, HPQ. But this is
It's HPE and HPQ.
This is the company that gives you a laptop. Next week, 15 minutes. 15 minutes might be all it takes. Jensen speaking at their Vegas conference.
Say that again. Jensen Huang of NVIDIA is speaking at what?
At their Vegas user conference.
At HP's.
HP.
And
in
what's your
Las
reference to 15 minutes?
No, he will be on stage for 15 minutes.
And you think
Within
what?
Enrique Lores. Well, this is what you need these days. You have to be able to demonstrate AI. Remember, I told you how AI worked. You were speaking to your PC. That's Jensen's chip. That's going to be in.
So you think there will be a demonstration of some kind?
Sadi's going to be there. They're all going to be there. But I just think that you need Jensen Huang, and all you want to do is go back to when the legendary Frank Slootman did interview Jensen Huang at a user conference. It was a blind side of Jensen, actually, to see when he speaks what he can be like and how amazing.
For the month of January.
People should watch it. He's amazing. That's why there's a reason why NVIDIA's Jensen Huang. Of course, the self-effacing will say his team is good, and they are. But he's incredible. Now, David, Duolingo is the star of the
That'll work right there, right? If I'm not here, that'll work. I think that'll work just fine.
Are extraordinary. Number of people who are taking the product. And
Break time, be right back. That'll work. So I'll mute that right now, and then an old-timey man break. Get rid of that right now for you. So if I'm not here in the morning and you see that picture up, you know that the news squawker will be blasting in the background.
The utility quarters that I've seen, and Jim Snee, this is the stock that's up the most today in the S&P. I think that there's a protein revolution to go along with Melissa Lee's documentary. People are not realizing that you need protein with these drugs, or else you get frail very quickly if you're taking them when you're
loss
over 50.
Of muscle mass along with the
Frailty
GLP-1s.
is the biggest reason why these drugs
and so
fail.
for a certain cohort above a certain age where it's harder to build muscle mass, they can become more
frailty.
Yeah.
We didn't even mention Oprah off
We're back to installing updates again. Let's just check and see what happens here.
That diet and exercise have failed America.
Well, they haven't failed you.
I worked out today at 4 o'clock, and I'm very proud of it.
As you should be.
Thank you.
All right, well, that does it for another edition of this hour of Squawk on the Street. You'll see Jim Cramer later on Mad Money. You'll see me in the next hour. We got breaking housing data then when we come back, so don't go anywhere.
Oh, here we go. Here we go. Here we go. We're good. We're back in business. It's it's so funny. It's like you call the IT desk and you go, my shit's not working. Have you turned it off and on again? Have you turned it on and off again? Yeah, look at that sexiness right there. There we go. There we go. Whew. Oh yeah, nice. Look at that look at that nice little gap to fill down there. Look at that beautiful little gap down there to fill. You guys gonna get saucy in here to try to take this out? Take a little short down here. Or are they teasing you over here? Would you say that's only the second question we asked? The first question is it plugged in? Is it plugged in? Have you turned it off and on again? What up, Jimmy? I missed a bunch of what you were saying in the other video, man. I have to do a new post on FinTwit.
One minute remaining. I'll lead with the US pending home sales change month over month.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Theaters March 8th.
Good Thursday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with David Faber, live for you as always from Post 9 of the New York Stock Exchange. Carl's on assignment. Take a look at stocks and bonds rallying off that PCE number, which was hot, but that was expected, and so it wasn't worse. The market
is lower than forecast,
liking it. The S&P 500 gaining about 0.5%. Communication services in the lead today, along with real estate, technology, and consumer discretionary. The only two sectors down right now are staples and healthcare, so the defensive groups. Part of the story here is the bond rally. We had seen a backup in yields into this report, and it goes the other way today. The 10-year yield lower, 4.23%. The 2-year yield, 4.67%. We're 30 minutes into the trading session. Here are some movers we're watching. Fresh results from a few of the cloud names: Salesforce, Snowflake, Okta, all on the move. More on those numbers and what to do with the stocks in just a moment. And don't miss the CEO of Okta on Money Movers next hour. Consumer stocks like Hormel and Papa John's.
All right, so we're back up and running, right? Woo!
After strong results.
See how long that took? That took like 15 minutes. Like if I break shit, if I'm like, here's a wrench, I'm going to throw it at you right now.
Both missed estimates.
Like 15 minutes.
It is headed toward its best month.
Hold on a second, boys and girls.
50% in February alone. It's incredible, actually. It's more than $62,000.
Quite a move. Yeah, approaching 63. All right, let's get up to pending home sales. They were out just moments ago, and Diana Olick has that for us. Diana.
Yeah, David, pending home sales in January dropped 4.9% month to month, according to the National Association of Realtors. That's a big miss. The street was looking for a 2% gain. Sales down 8.8% from January of last year. This number is based on signed contracts, so people out shopping in January.
Just heads up out there, pending home sales decreased 4.9% in January. Month over month, contract signings rose in the Northeast and West, but fell in the Midwest and South. Compared to 1 year ago, pending home sales declined in all U.S. regions. Now, seasonally, this is the worst time of the year for those reports, right? We have a big season coming up. Everyone's getting ready to sell their houses. The real true test of pending home sales will come this spring. Do people actually, are they getting their homes ready to sell? Are they expecting rate decreases down the pipe? If that's the case, you will see some loosening in this market. We'll discuss that at some point again this morning. We had a discussion about it earlier in the week, and we're going to talk about it some more today.
Mortgage rate effect.
Got it. Thank you very much, Diana Olick. Adding to that, the inflation report, which was very highly anticipated today, which we should talk about. This is the PCE. It comes from the Commerce Department. It's the Fed's preferred measure when they target their 2% inflation. What did we get? Well, exactly what we expected, and that's why the market is treating it as good news. Is it good news? Well, let's dive through it. I think the most important thing to watch here, what the Fed will be looking at, is core PCE. This is prices excluding food and energy. And look what happened in January. It ticked up. 0.4% was a lot higher than where we were. It was where consensus was, but that is something that is certainly going to get the Fed's attention on top of a hotter CPI and a hotter PPI.
Well, we're running at what, 2.8, right?
2.8 year over year. So we're in the twos, which is okay.
We're looking pretty good, aren't we?
We're looking
even with the hot reports we got.
If you look at the breakdown here, one thing that could be potentially worrisome to them is that we saw a 0.6%
So according to a decree, Russia bans gasoline exports from March the 1st to August the 31st.
Well, I got to update the Discord really quick here with something.
And that's a pickup.
So I'm being asked right now in the Discord, okay, call me this, but are they about to sell us down? I'm glad I'm still watching right now. So here's a heads up to you out there. I'm going to reply to the Discord as to the expectation here, okay? So you're in the Discord, take a look at this, okay?
In it, you know, so yes, the White House is going to say we're back in the 2% range, but the Fed is going to be a little more cautious. I think at the very least, and David Rosenberg put it well this morning from Rosenberg Research, it justifies why the Fed had to aggressively push back on rate cut, or at least on aggressive rate cut expectations going into this year. They were well advised to do so because they want to continue to see progress and make sure inflation isn't flaring back up again.
Right. So how do we put it all in perspective now that we've gotten more or less all the key metrics, at least for this last month?
Well, we wonder whether January is an anomaly, and so we want to see the data on prices for February, which, you know, we'll start to get.
We're very data dependent.
We're data dependent. So is the Fed. Because, you know, January has weather, which some people think was a lot of the reasons for some of this stuff.
Retail sales in particular, you showed us that yesterday.
And Walmart thinks that was a weather effect, too, on retail sales. And, you know, there are price adjustments that come with the beginning of the year. So we want to make sure. We got some other data, though, just to add to the overall picture today. Personal income, strong, up 1%. That was, you know, thanks to dividend growth, and also we're seeing wage growth. Spending was okay, not great. But the spending, if you break down the components.
Give me one quick second here, boys and girls. I got something I got to do.
Healthcare services, utility services, portfolio management, because stocks have gone up a lot. So it doesn't, nothing here changes the overall macro narrative that we have right now. I would also just mention jobless claims because they ticked up a little bit.
Just tell them about the pin at 5,100.
But they're still in very low levels.
Just tell them.
So it's not any massive.
Why can't you just tell them? Say there's some big banks that want paid on 5,100
when do we
for end of month. Just tell them.
Well, you know,
tell them the truth.
Next week, we're going to have.
Why does it always have to be like bullshit?
Yeah, first week of March. So we're going to get a jobs report, and we'll see whether this acceleration, both in price and in some of the spending components of January, calm down enough. There's a Fed comment to mention that happened overnight. New York Fed president, always important. John Williams, he's always a voter.
Yep.
He talked about sort of the balance of where they are right now and what they need to do with cuts. Listen.
Like traveling to the moon and back, inflation shot up and then it's come back down. And as with the Apollo missions, it's a safe return home that's essential. While we've seen great progress towards achieving our goals, the journey is not yet over, and I'm very focused on making sure that we complete this mission successfully.
I love when Fed officials.
Yeah, today's I got a note here. Today's data and markets reaction is hard to digest, so we put that aside for this note. Facts are that yields are dropping and futures are surging while rate cuts expectations increase sharply. 5,100 remains the main resistance, but the massive amount of short-dated options sitting at that level, which are mostly long, are the antithesis to that view. Gamma at a glance, we've got dealer gamma at 800M. We've got gamma flip at 5040. Zero date range is 5040 to 5,100. Call wall at 5,100. You saw me just looking below at the gamma chart, so I'm gonna make a post here in Discord for you guys this morning here. On the political front, a shutdown seems to be coming off the table, which is removing some uncertainty. That was something that we didn't want to hear yesterday, right? If you're a seller or a bear and that closed yesterday, the last 2 minutes before the closing bell, it was like, hey, we reached a deal. Oopsie. Quote, House lawmakers are set to vote on a stopgap spending bill that would avert a partial government shutdown this weekend, with Speaker Mike Johnson forced once again to turn a coalition made up mostly of Dems to pass it. Johnson and other top congressional leaders on Wednesday said they had agreed in principle on the substance of half the bills. So we're going to need to find out what that news is on the vote as we head into the weekend. That could be a source of volatility if that vote does not pass heading into the weekend. So I'll look that up today and try to find that for you. Let's go back to SPX over here just so you can see it right here, right? Buyers trying to come inside right now. See if I can give me one quick second here. Just going to snip this and put this inside the Discord really quick. There you go. If you're in the Discord, I posted an update for what to expect this morning. So if you want to check that out, take a look and see what I posted. And I posted it in the general chat for you. Put that up for you right there so you can see it all. Right there. I mean, one quick second, I'll be back with you guys in just a moment here.
Point of view, if you're a retail investor and you're feeling as if nothing can go wrong, it's the time when you want to think about rebalancing your portfolio, as asset allocators typically do. We think there are interesting places such as China.
Listen to this closely there here. This is an important conversation, the rebalancing conversation. Keep your ears open to this.
Record short interest,
Dow turns
record
negative, last down
disinterest,
0.1%.
just when it's likely that there's going to be policy stimulus, and they can, because interest rates are so low. We think next week, in fact, Super Tuesday is in Beijing as well as the U.S. There's likely to be some policy stimulus announced then.
We've been waiting for policy stimulus from China for the last year. And there are also geopolitical and structural factors there when it comes to things like
Beyond right now consolidating on its hourly trigger. Keep your eyes on BYND this morning. It's trying to back test to stay on trend to go higher.
We have seen policy over the last 6 weeks, and if you
it's got a really nice setup going on Beyond right here.
Moment back in November when Chairman Xi was in San Francisco at the APEC conference, he overtly courted American business. That was a signal that there is going to be a renewed focus on the financial aspect, something that had been largely ignored for many years. And we do.
Chase, if you're out there, are you going to hold your put spreads into tomorrow, or are you going to cut them loose as we come back down and retest the hourly trigger? Here's IWM, Chase, for you.
Thank you very much.
Hourly trigger's sitting at, half-hour trigger is sitting at 203.17, 203.03.
How to play this.
So, Chase, if you're out there right now, this is the IWM chart right here, brother. You want to be looking for this cross above.
And shares of Lilly and Novo Nordisk, both posting nice gains this month.
Right here, Chase, just so you can see it, brother.
Continue. We're going to discuss. Big show still ahead. Squawk on the Street. We'll be right back.
Your chance is going to be on one more rejection, Chase. Watch my cursor right here, if you could, my bro, right here. You want to see a rejection right up in here? Whoop. Right up there, and then a blast straight down to the depths of hell right there. I'll leave that up for you, my man. Oh, dude, look at that. I got booted. I got booted out of the pivot indicator last night. It says this script is invite only. To request access, please contact the admins. If you're a, just heads up, if you're a moderator, just a programming note. If you are an administrator or a moderator or a mentor of some kind, and you're watching right now, and you're in the Discord or anywhere else out there, you may have gotten booted from we instituted a bot last night that scours to find out if you're a member or not. And I got the boot last night, so I can tell this morning that I'm not. Even I got kicked out because I didn't go through the process of joining through the website.
Agree to
got backdoored. So if you were one of those people that got backdoored,
including exploration and production,
you might have been kicked off the indicators. If you're a buddy of mine and got kicked off, reach out to me or open a support ticket in the Discord and say something. And I'll make sure that at some point today we get you re-access to that stuff. Or we'll set up a way for you to sign up through the website so that you never get kicked again. Just a heads up out there. Effective funds rate is unchanged. Weekly U.S. initial jobless claims report looks like it's kind of just hanging around. That's good to see.
You see almost 19%.
Remember, velocity in any of these numbers is a real key. I'm going to mute this really quick. I want to talk to you guys about something here.
Also,
if you are a bull or a bear, I don't care what you are. I made a comment on Twitter this morning about these Fed speakers, right? What did I make? What was the comment that I made on FinTwit? I want to make sure you guys understand a lot of the things that I say publicly. Sometimes I'm shit posting. Sometimes I am speaking in weird ways and stuff like that. Some people are like, what does he mean by that?
Down that's down 2.6% at 13.47.
So what I wrote this morning was where did I write this here? Where did I make this comment? I'm going to delete this one right here. Delete that one because it's got bad links in it. I wrote, the real crime is going to be the Fed speaker, or the Fed speak later. They won't say it today, but in about 10 years after retirement, they will recall in their autobiographies that they don't actually know if their tools had any effect on inflation. But they sure know how, or knew how to massage it. That's the key point of that post. Well, there's 2 points to this post. The first one is when these guys retire, they normally will tell you things in their autobiographies. They will get honest with you because they're out of the public spotlight, right? But one of the big things about this is the Fed and the Treasury Department seem to me and have seemed to me, I think some of you can agree to this out there, right? That they are massaging the reports. They know that the moment that we get violence in any of these reports, like if you see slam down in inflation to 2% and then a ricochet off, if you start to see unemployment velocity, remember velocity
funding bill by this evening.
Anything like that, right? Like just straight up and down. You see that chart, any of those charts, jobs, unemployment,
natural gas
inflation, any of that kind of stuff, and the gig is up. So you'll notice that,
BCF.
or you'll notice right now that these reports, as they come out and with their revisions, they're just like, it's just like this, like, yeah, a little bit of that and a little bit of this. And, it's probably, I mean, you guys don't believe this shit, but if you've ever been inside of a C-suite, right? These people are fucking animals. I mean, fucking animals. There's a great short company out there, right? They sound like they're really smart. I'm not going to say which one. They had some leaked emails and DMs. And they were portraying themselves, and they still have great credit out there. They got great street credit even to today. They're quoted in the New York Times right now from time to time. These guys they portray something to you is the point, right? And then you find out what they're doing in the background, and they're buying zero-date puts on these short reports. Like, that's what they're doing. So they might tell you how complicated life is. They might tell you how they research all this stuff. But in reality, behind the closed door, when you're in there with this crazy CEO, or you're in there with the crazy CFO, or the, whatever it is, the grand poobah of development, or whatever it is, right? This shit's crazy. And you'll see these Fed presidents in the back, like, just massage it. I don't give a fuck what your report says. Some smart person's in there. She's like, I went to Brown. I got a PhD. I'm finally on my first assignment at the Treasury Department. Woo! And you literally got yelling in there going, I want it down 2 ticks. I want it up 2 ticks. I want it down 2 ticks. It's that stupid. I know you don't believe that. I know you think there's like rocket scientists out there making decisions based upon the real data. It's a fucking lie. They will ride that shit as long as they possibly can. The hand of manipulation from the power that is in like the Fed or in a big company overrides all of that shit. You see it time and again. It's why oftentimes companies fail, right? It's that ego and id in the background, that all-consuming monster quality that CEOs have, that the directors of these companies have. These guys are like sociopaths. If you ever, they do studies on these people, and they're basically like, I'm not going to kill anybody, so I'm going to go be a CEO of a company. You get what I'm saying? And maybe you guys disagree with that, but some of you have probably experienced this in your own life. As a matter of fact, I was talking to Joe last week, and we were discussing I'm going to try not to talk about someone in particular, but this guy, or this woman, you can tell I'm already lying, right? There goes the slap down on 50-40. If there is 50-80 down here, the 0-date market today is 5040 to 5100. 5040 is the target, the hope. So this person was working for a big company, okay? And this big company, every 10 years, gets a big order. And it just so happened that big order came in while this guy was a salesperson for this company. So this company, he hit a home run, right? And he hit all of his metrics for the year. I said he or she, right? He had all of his metrics for the year. And then two competitors came out and said, well, they can't be the only person with that shiny new thing. We're going to put our orders in right at the same time. So all of a sudden, this salesperson for this company was due more money than the CEO in his compensation package for the year. Like, he hit the magic thing, man. You know, that one grand slam in your career, he got it. He was gonna go home and be a multi-millionaire. Fuck you, well, kind of fuck you, the top 1%.
a.m. Eastern
And
time,
you know what that CEO said?
Gas change forecast a draw of 86 BCF on the prior build of 60 BCF.
That CEO saw what he was gonna get paid, and he was literally like, that guy ain't getting that fucking money. There's no way that salesperson is making as much as me. It came down to that one moment. And I mean, that the person that happened to, I would be completely devastated if that happened to me. That's something that you would think about the rest of your career. So to think that the C-suite people don't do that kind of shit, they do it all the time. They're monsters. Evil monsters. Hey, what's up, Chase? How you doing, man? Are you gonna get out, or are you gonna stay until Friday? I see you right now in YouTube, brother. Are you gonna stay short here in Friday or not, or long puts spreads, or I guess not long and short put spreads, I should say. Maybe I should be more clear. Chase, are you gonna stay in those put spreads, brother? We were concerned for you this morning, man. Yeah, it really was. It was the you can't make more than me. I shit you not. That was it. That was the reason. You can't make more than me. That was the reason. That's what it was. I kid you not. There's a guy I used to work for that used to do that. Not on that scale, but I used to work for a guy a long time ago, and he was just like, fuck that. These people make more than me. But these guys were all their incomes were based on sales. So they were making a lot of money. They were making more money than they were making more money than the owner for the time they were putting in. They were only working like 6 to 9 months a year, and they were making shouldn't say mid six figures, like 150,000 a year, 120,000 a year. They were working like 6 to 9 months out of the year. They'd have a 3 months paid vacation. It's better than it being a teacher. But he was always angry too. He'd be storming around. He'd be like, how do we get this money away from these people? And I'm like, I don't know. If you do that, you're going to lose all these people. These are people that make you millions. You've got the best people out you could. You've like this guy had like taken people from other industries that because the wage was so competitive, right? The pay was, 120, 150K a year. If you knew what you were doing, it was a pretty good job. You worked like maybe 4 hours, 6 hours a day, 5 days a week. So what is that? 20 hours, maybe 30. And then you got 3 months off paid vacation. And so he was always trying to figure out ways to keep money. I shit you not, like keep money from these people. And it was bizarre because it's like you realize if these people start making 50,000 or 40,000, they're gonna quit, and you're gonna be left with someone that's unqualified for what you're asking them to actually bring to you. His point was, we'll just throw more at it. I'm like, no, that's not how it works. We'll just throw more people at it. I'm like, no.
1 minute remaining.
That's not how it works. Let's see what's going on down here. We're going to go down to the SPX 1 minute chart here and just check this out really quick. Let's go to SPX 1 minute. Let's have a look-see on this. We've got a confirmation bounce down below on the hourly trigger, or excuse me, on the lower support here. So this green line right here is lower support. This is at 50.80. Looks like it wants to come up here and trade it again. So if you're going to try to take this out right here, I'm still looking for some more downside, though. But take a look at this one right in here. A little bit of a squeeze job coming up. Look for a target to the upside of 50.90.
Draw 96 BCF.
50.90.
Draw 96 BCF, lower than the forecasted draw of 85 BCF.
Bring this back to the 30-minute. Hey, Trader Podcast. Good to see you, brother. What's going on, man? I saw you comments yesterday, the day before. I've been meaning to call you, man. I apologize that I haven't. Dude, hit me up right now. Send me a text or something or a phone call, and I'll talk. Let's talk. I'll go on a break really quick. Hit me up, man. I'll set you up. What are you doing? Good to see you, brother. Are you out there? Hey, give me a shout right now, man. Where's my phone? Hold on a second here. I gotta take a quick break. I'm gonna put on CNBC and try to hook up with Trader Podcast here.
The trial.
Welcome back to Squawk on the Street. I'm Bertha Coombs with your CNBC News Update. Defense Secretary Lloyd Austin is appearing before members of the House Armed Services Committee this morning to answer questions about his secretive hospitalization earlier this year and subsequent cancer diagnosis. The committee's chairman requested the testimony after launching an inquiry into the secretary's days-long delay in notifying the president and lawmakers. Russian President Vladimir Putin threatened the West with a nuclear response if NATO allies send troops to Ukraine. He made the comment today at the beginning of his annual State of the Nation address, his comments coming after France's president suggested sending troops in the future rather than just funding and arming the country indirectly. And a Russian court rejected an appeal by Russian-American dual citizen to lift her detention on a treason charge and let her go under house arrest. Authorities arrested Los Angeles resident Ksenia Karolina last month and accused her of
We have posted out the US EIA weekly natural gas storage reports on the feed for anybody interested.
Currently being held in Russia. Back over to you, David, Sarah.
Thank you, Bertha. We'll take it, Bertha Coombs. Traders adding to bets on a June Federal Reserve rate cut after the Fed's preferred inflation gauge saw its lowest year-over-year increase in nearly 3 years. Doesn't tell the whole story, though. Former Fed Governor Randy Kroszner, now professor of economics at the University of Chicago's Booth School of Business, joins us now. So the year-over-year number went down. That's good to see, though the monthly rate, which we highlighted earlier, especially on core, up 0.4% and a 0.6% rise in services. How worrisome is that going to be for the Fed?
I think this is exactly what they are concerned about and why they're not rushing to cut rates. Certainly, we've seen the inflation come down from its peak quite rapidly, but to continue to move down is going to be tough, particularly because wages are not moving down nearly as rapidly. They'd been around 4%.
So Biden speaks to reporters and says a Israel-Hamas ceasefire probably won't start by Monday.
And that's one of the largest costs that firms face, and particularly firms focusing on services rather than manufacturing. So it's going to be a slow decline. The Fed's not going to move too quickly. June is possible, but this is one of the reasons why they want to see more data.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer
What
of
is your
Financial
sense,
Use
we were
Pro
talking about earlier,
for a year's
about
worth of our
just
service
what's happening in
for the
January?
price of
There
1
appears
month.
to be some sort of
Save
acceleration,
92%.
not just in prices, in parts of spending, manufacturing numbers turning up, and some of the other weaker parts of the economy. Do you think January is unique, or is it telling us something about the rest of the year?
It's always hard to tell from one number whether it is unique or something on a trend, and so that's why the Fed is going to wait to see. I think you can't overinterpret any one number, but you can come up with a number of factors that come in. We're seeing a little bit more weakness in some areas of spending, but we also saw a very generous increase in Social Security payments. So I think that's going to have to work out over the next few months. But I think this is precisely why the Fed ain't moving. Well, obviously they're not moving now. I think it's unlikely that they'll move in May. If things continue to move down, and if we see more signs of labor market weakness, they're then likely to move in June. But I wouldn't even say June is baked into the cake.
So what's your guess right now? 3 cuts this year? Do you think they'll be able to do that?
I think broadly that seems reasonable based on their forecast and based on the way the economy is likely to evolve. But we've been in a really fortunate situation of having this very soft landing. I'm still a little skeptical that we can get there with no pain. And if there's a little bit of pain, then the Fed's going to have to move a little bit more.
You mean economic pain? You mean labor market?
Yes. Yeah, exactly. I think
it hasn't really materialized yet.
Not at all. Now, I think one of the reasons for that is that even though the Fed raised interest rates really rapidly, still inflation was quite high, moved up even more rapidly, and wage rates moved up very rapidly. So you started to see them move up, not quite as much as inflation. Now inflation has come down. Interest rates, real interest rates, inflation-adjusted interest rates are now positive and have been so for about 6 months. Real wage rates, real wage growth rates are now positive. They've only been positive for about 6 months or so. I think firms are going to be less sanguine about hiring now that they have to pay a positive real wage. I mean, it's great for households, not as exciting for firms to be hiring. And real interest rates have become positive really for the first time in decade or so. I think that is going to be kind of a 1-2 punch, which will slow the economy down. Probably not necessarily leading to recession.
U.S. House Speaker
but I think
Johnson
we're
says
not
the
going to
bill
see kind of the
text on fiscal
gangbuster
year
growth that we've been seeing
2024
over the
spending bills are to be
last few
posted
months.
this weekend.
All right, Randy, that's a prediction. Appreciate you joining us with some insight on today's big numbers. Randy Krasner, former Fed governor. AI and tech names, a key part of the broader rally, but is healthcare where you should be putting your money to work right now? Look at Eli Lilly, up more than 140% over the last year. Novo Nordisk up nearly 70%. More on those stocks to watch right after the break.
In 10 minutes time now at 10:50 a.m. Eastern Time, Atlanta Fed President Bostic is participating in a fireside chat at the 2024 Banking Outlook Conference. Topics include the economic outlook, monetary policy, and the state of the banking industry. Keep in mind there is no text expected for Fed's Bostic, but there is a Q&A.
Mega hit GLP-1 drugs such as Ozempic and Mounjaro have completely changed the way society approaches weight loss. And with an estimated 5 million people already on these medicines, potentially for life, there's still plenty we have yet to learn about the long-term effects. CNBC's Melissa Lee takes a closer look. It's in our new documentary, Big Shot, The Ozempic Revolution.
In 2018, Novo launched the diabetes drug many started using off-label to slim down, Ozempic, followed by Rybelsus, a daily pill, and then Wegovy to treat obesity, all made with semaglutide. Rival Lilly countered with a 1-2 punch, releasing Mounjaro, followed by Zepbound, both with its active ingredient, tirzepatide.
Different companies are trying to combine different mechanisms.
Lilly is a leader here, and we plan to make it hard to be caught.
I believe we have picked the best mechanisms to combine, so even if some of the competitors succeed, we're still going to be a successful company.
And we're just beginning to see the drug's potential on everything from sleep apnea to kidney disease and Alzheimer's, many illnesses associated with obesity. Was there sort of a light bulb moment when you thought, wow, this could be a game changer in terms of how we treat obesity?
Yeah, when we started to see the data come out with the profound weight loss, and in the more recent studies showing reductions in cardiovascular risk, I think we probably will unmask more safety issues. My hope is they're not profound, that they're predictable, but time will tell.
Big Shot, The Ozempic Revolution. That's tonight, 10 p.m. Eastern. Here now to discuss is Melissa Lee. I mean, we talk about them every day as we should. Mm-hmm. It's been a true revolution. You went to see Novo, I assume.
We did. We were in the laboratories, and they are furiously looking for the next big weight loss drug, whether it be a variation of semaglutide, which is the active ingredient in Wegovy and Ozempic, or a whole new molecule. And just recently, they're saying that maybe we should think about a molecule that is more vaccine-like. They're thinking about something that could be a once-a-year injection instead of a once-a-week injection. So they're already at work thinking about the next sort of iteration of this class of drugs.
Isn't oral going to be the next? I mean, just being able to take it, obviously, in a different way than having to inject yourself?
So there's a lot of studies going on for oral formulations. The limitation, though, for an oral formulation is that you typically have to take it within a certain number of hours of eating. And so as opposed to giving it weekly, you have to think about when you're taking it in the course of the day, and that may be trickier for people to comply with.
What did you learn about whether they can use this in kids? Because child obesity is a big problem as well.
It is approved for use in children, and the American Academy of Pediatrics actually, in their guidelines, say that for children 12 and up, it should be part of the options that are explained to parents. All options should be explained, including medication and surgery. And for these kids, you think, oh, kids are just overweight. No, they're pre-diabetic. They're taking heart medication. These are people with the comorbidities that adults have. Plus, they're going through adolescence, so they're being teased for their weight. So this could really be a game changer for kids who are, where bariatric surgery was the only other option. This could be another option, but there is one big caveat, and that is trial data is only available for 1 year in this age group.
So you wonder about the long-term
impacts,
wonder about the access and who's paying for all of it. Right.
And in the doc, we take a look at two families. One of them right now would like to take a GLP.
Just a heads up really quick in the background, if you're wondering what I'm doing, we've got Trader Podcast coming on the show here around 11 a.m. I have some work I have to do in the background to make that happen. So here, let me put my, so you guys can hear me. Let me get rid of this picture really quick. Old man breaky time. Okay, so just a heads up with you out there right now. And we are going to have Trader Podcast on the show at 11 a.m. So he asked me, what are your thoughts on the market? I said, I think we're going to 525, 535, somewhere in there. He said, are you short? I said, nope. I said, I like the idea of of that move up higher. Even if we have sell downs, that the target is 525, 535. He is similar in that thesis, but he's got some important information about that thesis that you guys need to hear this morning. So we're going to have him on unless something changes, right? That's the thesis, that we're going to continue to go higher. We need some major changes, like we're breaking underneath the hourly trigger. We're blasting down to the daily. We're then rejecting the hourly to get below the daily to get down to a correction type event. Until that happens, he wants to discuss the timing of that with you this morning. So give me a few minutes to set that up. Trader Podcast will be on the show here in just a few moments.
Drugs of all time, but does it even go beyond sort of what people may be seeing right now?
Yeah, I mean, I think we're kind of like, we're in the very early chapters of this novel, so to speak. You know, Zepbound from Lilly was just approved towards the end of last year. And, you know, Wegovy and Mounjaro have basically been obesity centric drugs for what, a year and a half, 2 years now. So we're really not even scratching the surface. And the demand is so insane. I mean, every other person I know is taking one of these drugs. The demand is so insane that you've seen Novo Nordisk and Lilly invest billions into manufacturing. So yeah, I think we're in the very early stages. We talk about it like it's like this market has been going on now for some time, but in essence, it really hasn't. And the drug isn't approved just for obesity as a subsegment of this population is very new.
Jared, we've talked about Viking Therapeutics, which tripled in a single day based on its dual agonist, which showed similar results to Eli Lilly and Novo Nordisk's drug. But in terms of the 70 potential, you know, anti-obesity drugs in the pipeline, what do you think are the most promising in terms of actually breaking through? I mean, I know that there are several companies who are working with combination weight loss drugs plus drugs that will actually help you gain muscle mass. So combating the number one, you know, one of the biggest side effect concerns currently with this class of drugs.
Yeah, Melissa, I think on that point, I'm still probably betting on Lilly in terms of their pipeline and development. I mean, they've proven it before. They're working on other modalities, including, you know, less frequent dosing, which I actually don't think is that big of a deal. I think it's easy to monitor yourself as a patient on this once weekly. So I'm not exactly sure if this once monthly or once quarterly, or as you alluded to, once a year is really going to take off and be a game changer. But I think they're probably in the lead from a number of different modalities for the drug, including an oral, including muscle sparing. And there are, you know, a bunch of biotech companies kind of in the background working on that as well. And they're all kind of, you know, obviously super focused on it. I mean, every other headline we get out of this sector lately is another company, whether in the public or private arena, trying to, like, you know, tell the street that they have something in development or they're moving something into the clinic. So it's something we're going to obviously keep an eye on here for a while.
So what is the total addressable market? How do you make those calculations and give a valuation on a stock, which you clearly like? There's more demand than supply. But how do you think about the numbers and the potential? I know it's a relevant question for even some of the food companies that I cover.
Totally. I don't think you can really get to a realistic number in terms of the addressable market. I mean, the population in the U.S. of 330 million, you kind of have to separate that into the adult population. What percentage of adults are obese? Call it a third. That's kind of how the market models are being built. And you can get to some astronomical numbers if you're willing just to take the base population, what you believe is the percent that are overweight, and then multiply that by roughly $1,000 per month, which is the going rate of these drugs, especially if you're paying out of pocket. So it's very easy for analysts around the street to get to $100 billion plus. I know, you know, there are some investors out there who think $100 billion by 2030 is actually going to prove to be light. But on the other hand, you know, you got the payer complex, which you guys talked about earlier. Who's going to actually pay for it on the other side? I think right now, I mean, going back to, you know, where we are in market adoption, I don't think we really scratched the surface yet in terms of getting the drug to middle America, different regions where the obese population is more prevalent because, again, affordability and access, this is basically a New York and LA and Miami type of drug for starters.
Fed Composite
But I think in
Index
terms of building the
forecast
market,
-2
it's
on the
really
prior,
population
-9
multiplied by some
in Kansas
price,
City Fed
but it's
Manufacturing
unrealistic to
prior,
be,
-17.
overly
We
liberal
also
because you have the
expect
payer
comments from
complex on
Fed
top of that,
Goolsbee,
and then,
who joins a virtual
access and
event for
manufacturing.
remarks
And
on
can
monetary
the drug
policy at an
companies
unusual
actually make
time.
enough
No text is
to,
expected, but a
sort of
Q&A
satisfy the
is.
demand? That's where I think you're going to have abnormalities or reconciliations between estimates and what these companies,
Jared, gotta end it there, but always appreciate your time. Thank you.
Thanks, guys. Appreciate it.
Thank you as well. Good luck tonight.
Thank you.
Looking forward to it. Just a reminder, tune in again, 10 o'clock Eastern. Big shot, the Ozempic revolution.
Quick programming note as well as we head to break. Robinhood rival and retail trading platform Webull announcing plans to go public today in a more than $7 billion SPAC deal. Remember those? Their U.S. CEO joins us to discuss the news next hour on Money Movers. And that's not all. We've also got the CEO of Okta. Those shares are surging. They're at 52-week highs right now after strong numbers. We'll discuss it with the CEO. Back in just 2 minutes. The Dow down 21 points, just going negative.
Seeing comments from Fed's Bostic says inflation came down much faster than I'd expected.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
.com.
The industry is changing. If you look at Walmart, Amazon, Costco, all
Fed's
of those,
Bostic says the last few inflation readings have shown that it is going to be a bumpy path back to 2%.
Continue to expand their footprint. So when you look at the industry overall, there's a tremendous amount of change, a tremendous amount of competition, and this will allow us to be able to compete against those non-union
Says we
players.
have to stay vigilant and attentive.
Kroger CEO Rodney McMullen joining us yesterday right here defending the deal to buy Albertsons. It was his first broadcast interview and only since the FTC's decision this week to block the $25 billion merger. McMullen made it clear that they're going to fight
Bostic
this.
says inflation not at the goal yet. It's
It's
premature to declare victory.
He still expects to close the deal.
They don't know yet,
They
really.
don't know,
Yeah.
probably, and what that legal fight is exactly going to look like. But we kind of went point by point on the FTC's argument that it will raise prices for consumers, that it'll hurt the union's bargaining power and potentially
You
cost
cited
union
a couple of times. You cited emails and things like that that were referenced in the complaint, I believe.
Fed
In
Composite
terms of
Index
internal
of forecast
communications,
-2 on the
he didn't
prior
really have an answer.
-9.
No, so
Kansas
one of
City
the more
Fed
damaging parts
Manufacturing
for the
prior
company in this
-17.
complaint, they
We also
cited
expect
Kroger's
comments from Fed
executives,
Scoresby,
no-name
who
Kroger
joins a
executives
virtual event
saying
for remarks on
that
monetary
Albertsons is
policy
their
at an
top
unusual
competitor,
time.
that, you know,
No
when
text
it
is
comes
expected,
to
but a Q&A
price
is.
or services. And I did ask him about that. He said, I don't know who said that, but it's
Fed's
not true.
Bostic says
Walmart's
it's
a
probably
top
appropriate to
competitor,
reduce
Right.
which is
policy
what they
rate in
plan
the
to argue.
summertime.
And, you know, as someone who's covered the company, the other issue for them is that there's a long history.
Be right back. Give me a couple more minutes here. A couple more minutes.
Safeway Albertsons is one of them that have resulted in fewer jobs and store closings. McMullen promised that as a result of this merger, there will be no store closings, but it's something that the FTC is challenging on
I
historical
also
record.
now I recall you put up a market share chart. I doubt we have it now, but I think Walmart was 29%, even with the combination of Albertsons and Kroger. They won't approach
much
that.
Lower.
Yeah,
of course. And also, Kroger's point is that Costco is a big player, Target's a player, dollar stores are a player, and the FTC sort of dismisses that as these are the two biggest grocery chains. And I think the union piece is really important too, because they included labor, the FTC, and I believe for the first time as part of their legal argument in the complaint, not just about harm to consumers.
Yeah. Well, I'm glad you had them. We'll continue to focus on the potential for that transaction.
They've got earnings next week too.
Oh,
so more to come.
We got a whole lot more as well right here on the Fed, inflation, the markets. Tomorrow, we're going to sit down with Chicago Fed President Austin Goolsbee. That'll be a first on CNBC interview. Of course, you're not going to want to miss. Live market coverage continues right with us.
Kansas City Fed Composite Index released earlier to -4, which is lower than forecast, -2.
All right, here we go. We're getting ready here. Gonna get that hot sauce going.
City Fed Manufacturing 3-3.
As we start this interview process, here, let me see here. Let me get some of this old man break time. Get rid of that right there. So as we start this interview process, if the Fed speakers have anything quotable, and what we'll do is I'll in the background say something to you about that if it's something very important or something material. But outside of that, we'll probably revisit some of those comments after the interview.
Shortly expecting comments from Fed Scoresby.
Close that up right there. I will keep a chart up for you as well. You know what I'll try to do? Let me see if I can do both of these things. Maybe I can put up maybe I might be able to put up comments in the bottom left-hand side of the interview so that you can see the comments coming in. I don't know if I can, but if I can, I will. You'll have a chart up as well of S&P 500 so you can pay attention to S&P 500 as well while the interview process is happening. Give me just a moment here. Okay, that looks like it'll work. And then, what do we got to do? Copied the link. And then just a thing here. I got to do one quick thing here. All right, give me 1 second here. Just waiting for Trader Podcast to arrive. Does that work for you guys? Is that working for you guys out there right now? 506-18. There's a small gap. You see it right down here? See that little small gap right there? We'll see if we can buy that gap down below right here. That up right there for you. See if we can get down there and buy that gap. Right there. I would like to buy that gap. I'd like to see something like that. 2, 3, and then a blast down there, and then something like that. That's what I'd like to see. I don't know if that happens, but that's what I'm hoping for right there. Hey, you're here. Awesome. Good to see you, man.
Good to see you. Good to see you. Let me turn off the sound on the stream.
Just so you know, your microphone is hot right now. Your screen sharing will go live in just a few moments.
Yep. Give me a second, and I will be with you.
I'm going to switch over right now with you to the interview with Trader Podcast. If you don't know him, he is on FinTwit. He goes by the handle at TRADER podcast, PODCASTE. He is very well known on the Wall Street Bets boards. He's also very well known on FinTwit for 2 or 3 important things. The first one, of course, is always the fun one. He makes really funny, cool videos with Jerome Powell, usually on lead-ups to Fed events, and those things are hilarious. So if you ever seen those videos, a lot of them likely come from Trader Podcast. He's also well known for shit posting on Wall Street Bets with those guys, right? He makes those videos for those guys as well. He is a friend of the show, a friend of the website, a friend of the Discord, everything. And as a matter of fact, we want him to be inside of our network. So we have coaches like David AMS. We've got mentors in the Discord. And Trader Podcast is someone that we talk to. I would love to see him do nightly videos for us, or a stock show, or some kind of involvement with us, either market updates, written. He's a really nice guy. I trust I value his opinions. Just like anything, people don't have to be right or wrong all the time, but I do value his insights. So I like his insights. And then the last part that I really like about Trader Podcast is You know, you want to meet somebody out there on FinTwit that lends themselves to a conversation. He's one of those guys. So if you want to find out how to learn stuff on FinTwit, people will make a post on FinTwit, and you'll always find Trader Podcasts there asking for more insightful information, more explanation from the posts that people make on FinTwit. So I really like following him. If you don't already follow him, I recommend it. He's one of those people that his time on FinTwit, I think, is valuable. And he asks the right questions. You know, the trolls and the shit posting is great. The gentle digging and stuff like that. But if you're looking to make money, if you're here to make money, if this is your job, he's one of those guys that you follow because he will ask questions. He's got no fear being like, hey, I don't understand this, or I don't understand that, or why does this matter? Why does that matter? So that's why I trust this guy a lot. He asks the right questions. So I always like having him on. We're going to try to have him on again right now. And I'm going to switch over to an interview process. And as we're going to introduce him and let him do his thing. And in the background, I'm going to start to work on some charts so that you can see those charts as he's presenting to you. Okay. So let's get right into it right now. Please welcome. I hope this works.
Me too.
Please welcome. We're trying out a new format for interviews, so let's switch over there right now. And boom, not too shabby. We're doing pretty good here. Let me bring up this other thing here for us. Trader Podcast, have at it, brothers. Just start talking.
All right, man. Glad to be here. Thank you for the opportunity again. It's always good to be on the show and talk to you, and just generally, shoot the shit with you. If you guys, when I start talking about things, if you have questions, please put them in the chat. I have the Twitch chat open, and if there's anybody who's watching on YouTube and you want to ask me a question, Cap, just if you can read those and let me know, I'll be happy to look over certain tickers with you too, if that is what you guys want. But yeah, let me get started. So one of the conversations Cap and I were having this morning, I was like, I asked him because we have a common friend, and I told him that, hey, I was gonna talk to CaptainJimJames, and he was like, hey, ask him, is he short? And I was like, Cap's always hedged, which is kind of the way to do things. And what Cap and I started talking was that we both are seeing an upside of the market. I will talk about why I think it is a limited upside to the market based just on some of the data I've seen, some of it's some of it's stuff that I've looked at and I've kind of kept an eye on. So I kind of want to put this out there about how I actually think the move's gonna be explosive to the upside, but it's probably only going to last a week or so. And probably by next Friday, I will be cutting down on a lot of my exposure into this market.
So you're saying that you think that the upside potential ends next Friday?
I think I'm not saying it ends completely, but I think in this cycle, in this rally that we've gone, where we have completely ignored seasonality so far.
We have, haven't we? We talked about that yesterday. We have ignored that completely.
Yes, and that is what kind of gives me a little pause for concern. And you know what? While we're talking, let me generate a seasonality chart for right now, so we can kind of talk about it. Spy is what I want. So I have all these tools that I've built for myself, and I'm happy to share them with people. Cancel. No, save it. So while I kind of do that, so we've kind of run through seasonality, and let me kind of first start by showing this thing that's on your screen right now. It's something I started doing for my subreddit that I moderate, plus just hang out and shoot the shit after hours in. What you're seeing on your screen right now is what I call the overlayer. Can you guys see this? Do you want me to make this a little bigger?
I think you're good, man.
All right. So
why don't you read it to us?
Yeah. So what it is, the first figure you see is, I've kind of shown you this before. This is where I run a statistical analysis. I run correlations over 101 period windows across, like, basically since 1929, and find time periods where the correlation is above a certain threshold. Right now, my cutoff is 0.93. And then out of all the windows that it shows me, I run a statistical test to see which one of these time series have been predictive of the current price action time series. So what you have here is as it stands right now, and I'm only showing the top 7 correlations. All of these are over 0.97. So the thing that we are most closely tracking is 1960s from November 11th, from the 25th, so 1960s, November 11th to 1961, October 25th. That is the blue line. That is what we are most closely following. The second closest line is this orange line down here that we were following very, very closely in the same way that it kept going up, but there has been a divergence. You see, like right here about a week ago, it was going to be supposed to be the top, but we continued to move up, getting us more correlated with this 1960s line. So this is the possible options if historical price trends are indicative of how market psychology is. These are possible outcomes, what could happen, what has happened in the past when the price action has been similar for about 101 days. And that's about 4 months because it's 101 trading days. So below this, I have another overlayer, but this is only for election years where there is an election. And surprise, surprise, 1960s line, which was the highest correlated one, was an election year. And that's why I think this is like really important to kind of keep an eye on, is that yes, we might continue to go up, but there is a dip coming. And because there's catalysts around to set everything up for a squeeze, I think we have to be, as traders, be really careful going into next week. And I will talk about that in a second. Can you guys see my screen, or is
Yeah, no, what I'm doing is increasing the resolution to 720 so people can now see your screen, and then I actually made your screen larger. You would now take up the entire screen, brother.
Oh, perfect. Thank you.
Can you guys see that out there? Can you guys say something in the chat really quick? I want to see if you guys can see everything at home. If you're watching on a TV screen, you guys can see the resistance above here. They're trying to sell into that first yellow box. If we can break above that, we'll start squeezing again. Let me know in the chat. I don't see anything in the chat right now. The chat box is here, but I'm not seeing it.
Yeah, I see it. I have.
There we go. I'm starting to see some chat right now.
Yeah, I see it. It looks good. Yeah, so
there we go. Oh, yeah, that's why I'm not seeing any chat. Hold on here. I got to bring the chat box. Hold on here. There we go.
That's great.
All right, there we go. We got more chat coming in here.
So
Jimmy Barry's saying election year normally ends higher, so we will pull back, then rally into end of year where we will see 5,200 or higher. Then the big collapse will happen. All right, back at it there, Trader Podcast. People are asking you questions now.
Gotcha. Yeah, so I don't necessarily disagree with that. I'd also say that most years we go up. You know?
Yeah, most years we go up. Say that louder.
Yeah, most years we go up. So, even if there's a correction, corrections don't last years. So, that's
we go about 3.5 on average to 5 years up, and then about a 1.5 year pullback, right? Normally, it's something like 18 months or something like that.
And one of them is because like we had a huge long recession, right? Like downturn in the market. It was a bear market for a long time, and that kind of skews it. But it's usually like 16 months or so, like at the most. So anyways, what I'm trying to say is the historical overlayer for 1960 kind of tells us that, hey, there's like a squeeze coming, and these vertical lines that are on this chart are actually 10 days apart. So what this is telling me
Show me that again. Let me look closer. Show me. Do you have a highlighter on your Chrome that you can circle stuff, or do you want me to circle it on my end?
If you can circle it, I can make it even bigger.
Yeah, you make it bigger, and then how about you point to your cursor, and I'll circle where you're talking about.
So right now,
right in here, guys, can you guys see that right there? There's he's expecting possibly one more squeeze up right here before the correction. You guys see that on the chart? I'm going to remove my drawing there. So that little purple, that little blue, light blue zone right here, we're tracking this, the black line that you see right here. And then he's looking for that one last squeeze higher. So that would be the pain trade. If you're trying to time the correction, his point would be that between now, if I'm wrong here, Trader Podcast, correct me. But he's saying that there's a window, almost like a window of weakness. There's a window into next Friday for a obscene squeeze higher. If any of you are a pro trader, you should go back into the pro trader market updates or pro updates. And I have a charts in there on I think they're 1-day charts that show this exact thing happening. A major squeeze to 525 and even 535 possibly before the correction.
Right.
So all right, so go on Trader Podcast.
Yeah, so if you want to like kind of get a measure of that, it's about a 4% squeeze. Like
4%.
Yeah, but from the nadir, it is almost 5%. From the bottom here to the top, it can be a pretty significant squeeze over a couple of days, just because of how things are set up, and I will show you that in a second.
Here, let's put a let me let's look at what 4 to 5% is right now. Okay.
That should put us around 425, 426.
That's what I've got. I was going to show up these guys, but I've got 425 and an extension. I've got an extension to 535. Excuse me. So you got 4% is about 4% is what do I got there? 527.80 roughly.
Right.
But I've got 525 on the low end, and then I've got up to 535, which is about 5%. Right around, it's 5.36% up there. So I think we're on the same boat together, man.
Yeah, the only thing I would also add to that is that we have to kind of remember not to have that as like, oh, we are definitely going there, because we have more sophisticated products in the market now, right? I was going to talk about that in a second.
Let's do that too.
Yeah, we have more sophisticated products. We have 0DT options. 1960s, they did not have options. So you had more volatility. Like squeezes could happen. Now it's like, like if squeezes start happening, people start hammering 0DTEs. That effect at the end of the day goes away, right?
That's right. End of the day, it goes away. And its impact is different throughout the day. If you open them on the open and then towards the close, in any kind of size, there are other ramifications as we get closer to the end of the day, too.
Right. And so based on that, I want to give a quick segue. Follow Options Depth on Twitter. He puts out a SPX intraday gamma map, dealer gamma map, which is really, really interesting. The way they've figured out how to map the price action based on the dealer gamma and Vanna and Charm.
Can you read me alphanumerically that handle so that I can post it?
I will put it in chat.
Yeah, pop that in chat so that I can post it in the Discord as well.
Yeah. So that's the Twitter handle. They're really, really smart people. They put out the map like every morning on Twitter, and you can kind of like read it, kind of have it as your reference with the price action that's going on. And it kind of shows you where the gamma over the day decays. So where the support lines are going to be and where like the resistance lines are going to be. It's a really cool chart. Anyways, so we kind of talked about the overlayer. With some of the other stuff I'm like keeping a track of is the percentage of stocks in each ETF, sector ETFs, and IWM.
Oh, hold on here. Sorry about that.
Yeah, no worries.
Keep doing your thing. Continue.
Yeah, so right here, so I kind of keep a track of that. This kind of gives me very quickly a visualization of how markets are, like reacting. So currently we have over 60% of stocks across all the ETFs above their 50 SMA. And that's something I want you to kind of keep in the back of your mind. And more than that, we have about 62-ish% above their 20 SMA. So remember, like this 50 and 20 SMAs, they are a sign of momentum. So you kind of want to keep an eye on this. If this starts getting too high, like momentum is going to start getting topped out. And this is another chart I do. This is sorry. So this one, I have just the chart as a snapshot and how many are above. These charts are all your year to date. And for example, in XLC, how many percentage of stocks are above their SMAs year to date? So right now you can kind of see this is on a downtrend. XLC is on a downtrend. You kind of come and see if where's XLU? XLU has bottomed. More and more companies are starting to get above their SMAs, their 200 SMA, their 50 SMA. So when you kind of start seeing something like that, you kind of be like, oh, is this like rotation starting to happen? Is that sector like bottomed? And if utilities is starting to like get a kick, that means, hey, is the defensive trade on? So something to keep an eye on. So this is something I do every day. At the end of the day, I look at all these charts to try and figure out what's happening. What is really heartening to me is that this particular chart, IWM has kind of bottomed, and more companies and tickers, there's 2,000 of them in IWM, they are getting above their SMAs across the board. Excuse me. Similarly with SPX, more companies, more number of participants are getting above. So this is telling you that this is a rally that's like broadening out. I track how many companies or which tickers produce an ETF, a high 52-week high or low. I track how many of SPX stocks are above the 20 EMA. This is important to me because this is when it starts getting above like 400, you kind of need to stop and be like, okay, a downturn might be coming. There's no more room for them to run above 20 EMA because these usually mark a market top. And to that effect, I actually plotted out.
Yeah, so, someone was commenting earlier this week that we couldn't get above the 10 EMA either.
No, that's interesting. Yeah, well, that's something
that was earlier in the week, though.
Yeah, I can look into that. I can see how many stocks in the S&P 500 are above their 10 EMA and how that translates to like returns. So these are the returns. What's really important is, forward 30-day, inevitably we go up always. If most of the companies are below their 20 EMA, that's when you like long and just sit. And once they start getting to the 405 or 450 range, more than that, you kind of have to be like, okay, in the short term, there might be a pullback, like especially like once it's more than 450 companies of the S&P 500 above their 20 EMA. Again, something to think about. This is a work in progress as the high-low index. I don't really want to get into that. I'll have the McKellen oscillator, and this is what I wanted to get to. This is the last plot I wanted to show. This McClellan oscillator is a way to see like the momentum, visualize the momentum within the market. And again, these peaks, they usually signify a local top. So what I am seeing right now is that the McClellan oscillator has plenty of room.
Jimmy, let me check right now. Sorry. Sorry, I didn't mean to interrupt. I apologize.
Oh, no worries. I didn't kind of have I.
Sorry. I apologize. I didn't mean to speak in the mic.
The injection of 6
Talk about the momentum with the McClellan summation index.
Yeah, so I just see there's room to go up. Okay, so that I kind of want to see, like, this is why I think the market hasn't quite topped yet. We can still go up, and we can explosively go up. You know, this kind of does show that before like the market tops out. I want to bring up some statistics, and I'm going to borrow stuff from Nomura. And this is what this particular chart I want to make bigger and show you guys. So this is the Sharpe ratios and returns of different strategies in the market that the big boys employ. You know, are they selling straddles in the morning? Are they selling a call at the money put? Are they selling a daily strangle? Are they selling a 25-day out call? Are they selling a 25-day out put? Are they selling a daily daily straddle but are long straddle themselves? You know, this is the stuff they teach you in finance classes on, you know, how you do portfolio construction, you know, like how you could do things. What I want to like show you guys is that the selling the daily in the at the money put and selling a 25-day output and buying a 25-day call have the highest returns, 13% and 13.8%. And their Sharpe ratios are over 2. Just essentially put writing has paid out handsomely for the last year. And if you kind of go back, I have this chart in this one, but there's another chart I could probably pull up. I might actually have that in this one. No, I don't have it in this one either. But anyways, this is important because these the amount of assets that are in systematic funds that do this have essentially doubled in the last year. They've gone from like 100 billion assets under management to over 200 billion assets under management, because this has been one of the craziest ways of making money in this like last year. This is why everybody's saying we're crashing up. This is why I think we're crashing up, is because there's just so much money, so much vol supply in the market every day that nobody like the market's not going to fall. And this is why it also appears, you might have heard a lot of people say that nobody's hedged in the market, right?
Vol Wiz wants to talk about that vol supply that's in the market too this week, I think on Friday.
Okay, that's great. Yeah, that's awesome. I would love to hear that. And vol signals is kind of fantastic.
We need to get him on the show too.
Yeah, Carson is amazing. You do need to get him on the show.
But as soon as all this stuff, as soon as we get we haven't even done a hard launch here yet, man. The moment that we get that hard launch done and over with over the weekend, I'm gonna start reaching out to guys like him. And there's a bunch of people out there that I've been meaning to bring on the show and haven't had a chance to get them on yet. So I'm hoping to get a bunch of people on here in the coming weeks, so we can all just chat and hear your opinions and stuff like that. So yeah, vol signals. I want to get him on for sure. I talked to him briefly, but I haven't had a chance to follow back up with him. And I like him a lot too.
Yeah, definitely. So anyway, so what is the impact of these strategies that are in the market like every day? And I want to bring up this chart. So this is what happens when a fund wants to sell puts, right? Somebody's got to buy the puts. So that's what a market maker does. So a market maker's job is to absorb the orders that come into the market. And this is a chart from the 23rd. So it's about 6 days old, but this still stands. Actually, it's gotten even worse. The dealers are currently in short gamma in certain pockets. And this is because clients customers, traders have been buying upside calls into the 5300 to 5400 area and into the 5200 to 5150 to like 5250 area. There's a lot of short vaults of short gamma pocket. So what happens at this when dealers are short gamma? This is where you get explosive moves to the upside. When dealers are long gamma, such as these pockets that you see, this is where we get a grind. And this is kind of where we are. And this is, again, 6 days old, so this might have shifted around a little bit. But these areas, the reason, if dealers are long gamma, they will sell every rip and they will buy every dip. This is why the daily straddle is like very, very small. And do you guys remember that big rally we got off of NVIDIA? The big rally we got off of NVIDIA was in this pocket right here, because we were towards the bottom of this pocket before NVIDIA earnings. We had kind of sold off into it, if you guys remember. And then NVIDIA saved the market and we ripped face for 3%, essentially, like between overnight and the next day. That was this area right here. So anytime there is short gamma on the dealer side, that's where you see big vol pops. Okay, so I kind of wanted to show this.
I've also got some questions. So whenever you're ready,
yeah.
Do you want me to text? Do you want me to text them to you in the chat so you can prepare for those questions? Or if you don't want to answer them, you don't have to. If you're like, I'm not prepared for that. Sometimes I get asked. People ask me questions, dude, about things that are like, we want an answer right now. So I don't know. And one more, just a market update here. That's that demand, that stink bid down below is at 5061 on Bookmap. Do you want to just text them to you and see what you want to answer, or no?
No, just ask me. If I can answer it, I'll answer it. If I have an intelligent response to it, I will.
Okay. The first question comes from Jimmy Berry.
Mm-hmm.
And he says, Trader Podcast, have you factored in
$6 trillion?
Yeah, he said a few things. He said election years normally end higher, so we will pull back. We talked about that, what he said earlier. He said normally we have 18 to 21 year cycles, which correlates with the housing market. COVID interrupted the cycle, so 2025 will be the collapse. He says, and senators will blame Trump for the U.S. economy collapse. Now, Jimmy Berry, I think he's a Democrat, so he's just being, I don't think he's being biased here at all in that statement. If you don't know that already, I think Jimmy is an old school Dem, because Trump will be the president. And that's how they will finally get rid of Trump. But personally, I like the dude. Oh, he says that personally, I like the dude as president, so he likes him. That will be the pullback 5% retrace. He says, Trader Podcast, have you factored in the injection of $6 trillion into the market since COVID? And that's $6 trillion that was injected by the Fed.
Yeah.
I have never in 35 years of trading ever used gamma either. Simplified trading in two categories: demand levels, supply levels, and price. Yesterday's highs still holding for now. Politicians are all wankers, he says.
Okay.
So have you taken into any consideration? Like my question here would be: have you taken any consideration into the injection of liquidity into the market, and then possibly even the secret liquidity injections we see through the Treasury Department right now? I'd add to that question.
Yes, I have. And I have a very different, somewhat academic response to that.
Let's hear it.
Okay. The fact that we actually had all of that liquidity pumped into the system is the reason why I think higher for longer is actually good for the markets.
Yeah, try to smooth that out over years rather than just 6 months or 12 months. I like that answer.
You know why? And so I know a lot of people make fun of modern monetary theory, but I actually really like it. I enjoy the core tenets of modern monetary theory, which is basically if you are a country with a sovereign currency. So there's only 2 countries in the world that fit that bill: the United States and the United Kingdom. You are a central reserve currency, and to an extent, I guess Japan too. You can kind of say that because you're seeing that happen over there. When you inject money into the economy, like for example,
that's a good point to make about Japan's having that coming out moment, right? They're trying to compete now with China, right? To some extent.
Well, that too. And the thing is, the yen carry trade has been like going on 2 years.
Mm-hmm.
Well, a year at least, right? And they're going to raise rates at some point. And we're kind of seeing some interesting stuff happen already in the dollar. But I don't want to get into those into that segue right now.
You don't have to.
We can talk about that. Yeah. So I want to address that question about the $6 trillion of liquidity injected. So modern monetary theory says something very simple, that taxes don't really fucking matter. Taxes are just a way to siphon off money out of the economy so it doesn't run too hot. What actually the money printer, the digital capability of producing loans, originating loans, basically creating more money in the system, is what really sets apart the United States and the United Kingdom. Now, modern monetary theory says that as long as there's absorptive capacity in the sectors where you inject money, which is basically, can they take that extra cash and not run too hot? And if that's the case, you're not going to have an inflation problem. The issue we ran with is that we gave everybody money and we gave it to them in discretionary areas. So that's why and then we had a supply shock at the same time during COVID. That's why we got rampant runaway inflation. Now, as I said, the core tenet of modern monetary theory is that you don't need, taxes don't really do anything. It's the government budget and all of that. It doesn't really matter. It matters to an extent, but not the way people make it out to be. But taxes are a way to kind of suck liquidity out of the system. The other way is higher interest rates. They're a good way to suck liquidity out of the system too. So that can happen over a longer time. That's why, I think everybody got used to the 0% interest rates, mortgages at 3%, like under 3%.
Do you have any references, consolidated resources that you would recommend to learn about MMT? You know who does a good job to me? Might be able to answer that. One of the resources I use is Bob Kendall. He'll at times do spaces interviews with guys that at one time held huge positions in our government or counseling our government, and they will delve into the truth behind MMT. I'll try to find a link to that for you, Career Low, out there at some point. Some of those resources. Do you have any books or anything that you'd recommend on monetary theory?
Stephanie Kelton she wrote a book, and she was Bernie Sanders's economic.
That's right. Advisor. I remember that.
Yeah. So Stephanie Kelton, she's one of the biggest proponents, and then there's a professor from Bard College. Forget his name.
Her last book was The Deficit Myth, Modern Monetary Theory, and the Birth of the People's Economy, I think is the rest of it.
Yeah. She's kind of like modern monetary theory is also like very much like, if you like really think about it, like it's very much like the government can keep printing money and give money to people, right? So it's kind of like very socialist in nature, but it's not really. It's just basically telling you like what the involvement of the government is and should be. I think we're gonna go close some gaps today.
Yeah, I think we've tracked this day pretty well here so far. I mean, from what we've done here, we had the up move, we got the down move or the sideways, and now we're doing the down move to close the gaps. This is the pre-market gap rip that we had right here. So just watch as price comes down and closes that gap. The big question here is going to be Chase. Answer our fucking question.
What's our question?
You're getting a chance. Well, so Chase was long put spreads this morning or yesterday in the close in IWM, and my question to him was, are you going to diamond hand your put spreads, and then when we retrace back down to the gap on the open, are you going to close them out, or are you going to diamond hand those things into Friday? So Chase, if you're out there, we're all patiently waiting, brother.
Yeah.
Sorry.
I'm taking a YOLO right now on 437 0 DTEs. So
yeah. Well, like I think 5040 and SPX is the 5040 and SPX is the target for 0 dates. Let me take a look right now. We're trading 5062 right now. So we could have a little bit more blood. So if you're looking right now at that, you get the first blood right here. You could see one more rejection here, right? And then you have the capitulation buy is actually lower. So if you're at home right now, unless we break above the 1 in 5 minute trigger, you are not in safety right now below the hourly trigger. Just beware that you could have that one more capitulation move lower. You will reject off the hourly. So right here, you'll get this squeeze up here, and then the blast down below the gap from this morning, and possibly that one move down, and that was the actual dip buy. So just be conscious of it. It's dangerous buying a dip right here. You'd want to see us above the 1 in 5 minute trigger, a successful back test, and then beat this prior high over here to be in safety again as a bull, okay? So this is very dangerous here. You'll see me do stupid shit down here and start buying 0 dates, but I don't recommend it to you out there watching the show right now until this calms down. But, anyways, you guys have your own risk, what you're going to do and what you're going to buy and that kind of stuff. Tesla coming back down to test its daily trigger right now. Q's on its hourly trigger with a half-hour cross. Beyond Meat just parked right now, still trying to make a move higher. Apple is below its hourly trigger. That's not looking good. And UNH is looking for another sell right here. Currently, they're selling 501.45, trying to trade 479. eBay is pulling back right now on its rip from yesterday. IWM sitting on its hourly trigger with a pretty nasty looking violent downside move ahead. It's currently trading 202.92. If it does reject and we head down, your target on IWM is 198. That's for you. Chase. If you're gonna stay and if you're gonna diamond hand that shit into tomorrow's close. All right. One more question for you. Trader Podcast. I'm gonna give you a second to think about this one too. Hold on here. I got one more question here. Or I got a few more questions. The first one is, can I please ask Trader Podcast, does he have a list or a way to track the percent difference in price for stocks compared to their 2021 yearly high or all-time highs? I think he's wondering, I could be wrong on this, but let me know if I am wrong on this. This is from Career Low as well. He's asking, I think he's basically asking, are you canceling out the anomaly of COVID or not in your seasonality projections? Tell me if I'm wrong on that, by the way, Career Low.
Depends on which chart you're talking about. Are you talking about these charts?
Let's see. Career Low's in the chat right now on Twitch, so maybe he can, Career Low, try to simplify that question if you could. I'm waiting for him to comment right now, see if he can simplify that question.
Gotcha. Yeah, so I mean, this is all year to date, and I do not take out
any anomalous events or anything like that.
No, I don't.
Yeah, I do mine over 5 years, so it takes into account those bear markets, and not, as you know, maybe everyone might not know this, but hedge funds and banks actually take on insurance since 1987 on exogenous events that nobody knows about, that the banks don't know about, that kind of stuff, insurance against those kind of events. So you usually see one of those every 5 to 7. I think it's 3 to 5 years it becomes that risk comes into being, and then by year 7 we have one of them.
Gotcha. This is a decent recovery. Let's see how far this goes. But yeah, so to get back to the
here goes. Oh, sorry. Here goes career low, man. Read if you can look at your screen, Trader Podcast. Career low is asking redefining the question right now.
Let's going back to 2021 highs. No, I do not. I mean, I could write something up for it, kind of see how many are off their 2021 highs, how many have beaten those 2021 highs on the S&P 500.
Is that what he's asking? So, career low, are you asking for?
Well, with little to no effort, if you know a little bit of Python and you have access to ChatGPT, you can ask it to make it for you. So
what is he basically looking at? Stocks that have not recovered since the 2021 high?
Yeah, essentially.
You know what? I will point to something here. I need to point to something. I've made this comment before, and I got to point this out to you guys again, okay? What's the ticker, Trader? If you can remember this, I'm not sure, but there was DGLY. I want you guys out there to look up the company DGLY, and this is a lesson to you, okay? DGLY is the ticker. The name of the company is Digital Ally, or Ally, Digital Ally, ALLY, right? And what you do is look up the company name for historical news and look at their chart going back to the beginning. A lot of tickers on their meme. People are like, "There's never been a meme stock." That's a fucking lie. We've had meme stocks forever. That's a great company to watch because at one time, if you read their news articles from their rise in their stock price, they had 2 meteoric rises. They were the darling of Wall Street. Darling of New York Times, darling of Wall Street Journal, darling of CNBC. They made those 2 meteoric rises, and they've never come back from either. And if you're wondering about tickers from the COVID blast off that took place for stay-at-home stonks and all that kind of stuff, I would say to you that company is a great example of you might thinking, well, is this company ever coming back? And you see that they never really do. We get new companies that take that place of those meme stocks over time.
Right.
All right. Sorry. Continue about these stocks that haven't come back to the 2021 highs.
Yeah. No. So I can write you a script, career low, probably over the weekend. Just ping me on.
So Trader Podcast will be in the Discord at some point today, career low. If you find him in there, just reach out to him and be like, "Hey, man, how do I write some quick Python to check those companies out by market cap or whatever and see which ones have the potential to come back?"
Yeah. By the way, Cap, once I'm in the Discord, I can drop these at the end of the day every day because I generate them at like 4 o'clock. And
awesome, brother. I will talk to Bork and Joe. Let's see if Joe Donut or Bork maybe can help you out, or maybe let me see who's out there right now. Yeah, if you look at DGLY, their whole chart from the start of their history, and then whenever you see the meteoric rise, I think they had 2 huge runs way back in the day, and then search for news stories from way back in the day against that company, and you'll be fascinated to see a lot of similarities to a lot of meme stocks that you read about today, and you'll see that this is a normal thing for companies to go through. So if you're a new trader, young trader, new investor, if you're not old and crusty like Jimmy Barry or me, and you want some fine examples of those companies, Bork McGork saying, Trader Podcast, call me on Discord at Bork McGork. I'm going to send you his handle, Bork. Or no, sorry, Trader Podcast. I'm going to send you Bork's handle so he can get you inside the Discord.
Gotcha.
I'll send it via DM, brother.
All right, thank you.
What other questions do you guys have out there? Anything at all?
Yeah, so anyways, somebody had earlier asked me, is TraderPulse drawing data from Yahoo Finance on Python? Yes, I am, Connect Mobile. That's what I do. I actually poll it a few times a day to kind of update my data throughout the day. I track about 6,500 tickers that are trading on the New York Stock Exchange. Just building my own database because I don't want to pay anybody for it. And as long as I'm polling data every day, it kind of works out. Interesting. Wait, Cap, we can see your screen.
Oh, that's okay.
Right.
Oh, hold on a second. I'll bring it over here.
Yeah. Because I wanted to talk about this. Somebody was asking about the vol charts. So I have that on my screen right now. I know it's kind of small for you guys to see, but this is where we are. 5070 is the current spot on SPX. And what I'm seeing is vol for the downside is lit up for today, like 5,000 and below. I don't think we're going to go test that. But that's 3 standard deviations over where it has been over a 60-day look back. Vol for tomorrow, sold. Vol for Monday, Tuesday, sold. The 8th, which should cover non-farms payroll and J-Pow's testimony in Congress on the 6th and the 7th. Excuse me. That vol is bid, but not by a lot. Only 0.25 standard deviations above the mean over a 60-day look back. And so what you're looking for is when you see green, that means they are buying. There's demand for vol on the upside as well as the downside. And when you see red, that means this vol is being sold. So that's kind of how you look at this. When vol is being sold, there's no fear in the market. That's what that tells me. If I look at the term structure for today, which is this T line, and I compare that with the term structure for yesterday, we are slightly elevated into the 8th, as I said, but otherwise we've kind of sold all volatility going into the 4th, which is Monday. So we are, they're selling volatility right now. And as I look into the S&P 500, you can see the flows kind of, puked all the way to negative 2.4 billion in delta on the S&P 500 complex, and they've reversed to the tune of $1 billion. And if I look at that, I bet, yep, it's a bunch of vol sellers came and sold puts and brought us back up, and some calls are coming in. Anyways, so yeah, vol is being sold. Vol is, that's kind of what I was saying earlier, that there is more money. There's 100% more money in vol control funds, vol selling funds than there was a year ago. And that's why we just see anytime we have a big, melt, a big drawdown just like that. I don't know how many handles was that. Let's see, from this peak. That's 84 down to 64. So 20 handles in about how many minutes? 12 minutes. Yeah, they're kind of selling that off now. So anyways, that's kind of how that goes. Plenty of calls, put sellers around to support the market. Any other questions? Is there anything else you guys want me to look at? I'm happy to look at positioning for tickers if you're interested on Hero. Oh, TQQ flow. Look at that. Somebody just bought, holy moly. Somebody just bought 17.5 million in call delta on TQQQ. We could probably look that up as to what strikes they bought.
Hold on a second here. I'm watching something in the background.
Yeah, I'm not sure, man. Gilead. Some calls came in. It is below its last close. Apple put wall breached. Uh-oh, that means there's a bounce opportunity right here at 180. Anytime something like Apple goes below its put wall, it is usually supported. So good R&R on longs here. Shopify. Somebody sold a bunch of weekly calls. That's why we got that right at that dip. Goldman Sachs. Weekly call buying. So tomorrow, somebody's bought 5 million in call delta in 39, 55. So 15 in the last 15 minutes. About 15 million in call delta for tomorrow came in on Goldman Sachs. Which makes sense too, because it's below its put wall. Okay.
I was just letting or Chase is all upset right now, and I was asking him earlier if he was going to close his put spreads, but
well,
it looks like he hasn't.
I said I did, right? When you said about YOLO'd into those 0 DTE calls, I'm up 140% on them.
Woo! Smoking right now. Trader Podcast YOLO'd 0-day calls. Are you going to sell them on 507.13, or are you going to get out of them?
I'm gonna see. Give me a second. Let me look at my chart really quick.
Yep. How long you holding them for?
There's 0 DTEs, so.
Well, we know it's for the day, but.
Ideally, I would like to see a tag of like 438. So get these to be over $1 from like 35 cents a piece. 438, 15, 438, 16. That's what I'll try and target. But I'll move my stop up. Mama didn't is no bitch. So, anyways, let's see.
Currently trading 436.93 for any of you tech nerds out there. All right, continue on.
No, I mean I'm open to whatever question you might have, man. Like I'm happy.
Let's see what these guys are saying right now. Let's see what some of these questions are. Trader Podcast, do you ever use TRIN? TRIN. Trade Moxie is asking about projection for AMD.
AMD, yes. Let me look that up for you.
He's like Chamath, man. He's all chest and arms, but he's got skinny legs.
No, man. I actually deadlifted 3 plates this morning.
Tell him, dude. Tell him he deadlifted this morning.
Yeah, man. Like I usually try to work out before market opens.
He does it, dude. He breaks it out. He breaks off trend every morning. AMD. How about a projection for AMD?
So AMD, we've had call flows, very minimal put flows. It's been steady. This is chop. That's what that tells me. You kind of want flows to kind of go up and down, but there's flows that came in the morning. Nobody's adding up here is what I want to say. So, its call wall was at 180. It's busted through its call wall, man. Tomorrow is Friday. Take some profits.
Take some profits.
So,
So you're saying take profits on AMD into the weekend?
The smart conservative thing to do would be to take profits and not add up here, especially given where its call wall is. But you know what? Since we are going to do this properly, let's look at what positioning for AMD is. Yeah, it's opened it up. That's nice. They fixed that for me. Okay. This is the put and call walls, right? So 180 was the call wall right here. There's a bunch of puts down there, and they're all getting fucking smoked right now. 182, decent call. 185, decent call. Call gamma right here, and then at 190, there's less at 190 and more at 185, and we are right around the 187 level, right? That's kind of where we are. Let's look at the live price. Yeah, we're right at the 187, 188 level where there's minimal gamma. So if you kind of go back to the put, the call, we're above the call wall, and we're in between those two. So there's a higher chance that unless you break through and get closer to 190, that you're gonna like kind of
ping pong and magnet in there.
Yeah, or to be honest, if it's 185 and no more calls come in today, like to the upside, to hold the upside even more, you're gonna see like a big reversal back, and I'm talking reversal back to like possibly 170.
So they will sell into that strength, right?
They will, because that's AMD, and this is what they do.
Where is the dip to buy on AMD?
On options, the dip to buy would be at 170.
So do you hear that there? Start taking some profit. Any squeezing higher should be met with strength in selling, you're buying the dip at 170.
Right. And so if you kind of look on the AMD term structure, people are looking, the vol is high 4 months out and higher, but they're selling around here, like they're selling calls up there, they're selling puts down here. So nothing's really like telling me that they want to take the ticker down too much or take the ticker up too much. It's kind of like they're just that dealers are happy selling volatility for AMD, like for the next 3-4 months. So from that vol perspective, there's no edge there. So you kind of have to go with momentum. You kind of have to go with where existing positioning is. And that goes back to the other question I wanted to answer from that older gentleman who was talking about he's never used Gamma to trade. Gamma there's confluence in where Gamma exists and where support and demand zones are going to be. So if you use support and demand zones, great. That works for you. If you add Gamma into that picture, it tells you which support or demand zone is stronger. That's all it does. It tells you. And it's, in my mind, it's kind of an advantage. It's kind of an unfair advantage. If you know that and you're like are really good with the put demand zones. My username on Reddit is Trade the Zones. So I come from the same school of thought. I was a zone-to-zone trader, and I added volatility and options positioning into my toolbox for trading over the last 2 years. Plus, I'm a data nerd, so I enjoy all of this stuff. All right, so AMD done. Anybody else? ELF. I'm a girl dad. They love that stuff. I know ELF is also the lipstick trade. If anybody knows their history in recessions, if you think there's a recession happening or coming, you should long. You should long makeup because it's an easier way for women to feel good about themselves without having to spend a lot of money. ELF. I don't have live trading data for it, but I can. Oh, actually, before we go to ELF, I wanted to see one other thing for AMD, which is history. So on my chart, like this table, I can see the call wall. The call wall's been at 180 for a while, for 3 days. It was at 190. The put wall's been at 170 for a while. Next expiry call volume, 62% of all calls expire tomorrow. 58% of all puts expire tomorrow. Yeah, just by looking at that and how much delta is expiring, about 4%. Delta is expiring tomorrow. I would be taking profits if I was in the AMD trade right now. Like I would be like starting to think about taking profits pretty quickly. So now let's look at ELF positioning. Put call impact. Call walls at 210. Where is that trading right now? Can anybody? Actually, let me pull up my chart for ELF. Let me keep an eye on my options as well. Holy moly, 2.15%. Sorry, 215%. $35 to $1.10. Yeah. Let me just manage this trade a little bit. Let me see where I want to. Yeah, I think I'm going to just sell these and I'm going to take the win.
Right there. Sorry, I got something doing here in the background.
Oh, no, it's okay because I'm actually getting out of my trade because I made money.
So you're taking 100%. This money on the 5-minute trigger here, or at least on SPY. Yeah. There's still some squeezing that can be done here.
Oh,
we are in the little bit of traffic here. If you're watching the bookmap chart down below, we got some traffic all up in this zone right here.
So I had 5 calls. It wasn't a big position. If somebody wants verification, I'm happy to drop screenshots. But I bought them for 35 cents each. I had 5 of them, so it wasn't a big trade, and I just sold them for $1.06. And that's 200% on a 20-minute trade. You don't get those returns anywhere else except the American stock market. So, ELF. Where does that sit right now? It's at 207. So 210 is call wall. There's not that much. There's no puts below. So, yeah, that.
Trying to show these guys the roughness to get up there. And show this for these guys here. Right here, we don't want to see the rejection and the reversal here. So we've got a bull plane, or excuse me, a bull cross forming on the 1 and 5 minute trigger. If you are going to stay long here for more upside, you're just looking for that cross. See the white and red line right there? If you end up getting thrown down, there could be a liquidation breakdown here. Just trying to take your stops out for the more continuation of the upside. But if you do begin to reject below that 1 hour trigger down here at any point, if you start to see any action like this, right, and then we begin to reject here, be careful of that continuation to the downside. All right, so go ahead again, Trader Podcast, and here's they're trying to take your stops right here. Just heads up.
Yeah,
you guys want to watch that right now.
This is why I kind of was like, I'm out. That's good money. Why be greedy? That's how much was that? So from 35 to 70 cents times 5, that's like $350. So yeah, let's call it $300, right? Let's call it $300. That's $300 of Chipotle's I can buy now. So that's lunches for the next 2 weeks. That's how you should trade. Don't be greedy. Don't be a greedy little pig. Bulls make money, bears make money, pigs get slaughtered. All right, so ELF. The chart looks bullish, but options positioning doesn't look that great because there's no puts. You kind of like to get real drive up. You want puts up on these things too, where people have like bought in the money puts and stuff, and they get kind of smoked. All of the puts are like down here and below. So getting up is going to be a grind. And plus, like 200 has this big stick of call gamma. All the other call gamma is like diminishing past 210. I don't see that much strength in this from options positioning. I'm not saying fundamentally or news driven it can't go up. But yes, if that was the question around ELF, I honestly think it is a better trade would be that you sell credit call spreads on this. You could kind of sell like a 45-day out, 220, 230 spread and kind of capture some of the momentum back. Like they could probably in 15 days make 20-30% on that spread pretty easily. So that's one way to like look at it. Or you could do a put spread, but again, you might lose premium on that. So
Hero Call saying thank you very much, Trader Podcast.
Yeah, no, my pleasure, man. We can look at my favorite ticker, which is
Bork Trader Podcast is saying that he sent a friend request to you via Discord.
Yes, because I can't send him a message otherwise because he's got that protection block thing going on. So
I think we had one more question here for you.
Yeah.
Let me check here. Trader Podcast, do you ever look at central bank liquidity injection charts?
Nope.
So maybe hopefully he's piquing your interest in those. So yeah. Jimmy Barry's asking, let me ask the audience, do any of you out there follow central bank liquidity injection charts? I actually do. So I'm wondering if any of you do as well, and how their timing doesn't always coincide with. They kind of sometimes inverse with the stock market. Does anybody else out there follow those Fed liquidity charts?
So, as we wait for the other answers, but
see if anybody's answering here. Yes, say whatever you want to say, brother.
Yeah. So Roperito, you know him, Rope, right? On Twitter.
Say again.
Rope, ROPIRITO. That's his Twitter.
Yep. Yeah, I know him.
He's a friend. So he made the liquidator, right? The trading view chart you can like copy and you can kind of like see where the Fed liquidity injection is and all that. The thing is, I kind of like looked at that, but I found a better signal was to just keep an eye on Dixie and keep an eye on yields. because what is that they use for liquidity injection is usually treasuries, right?
Yeah.
The rates are going to get impacted and the dollar is going to get impacted. And that's a much more tradable signal than just looking at, oh, and then the thing is you'll get to know about it after the fact, but you'll be able to see the dollar and the yields change and give you a better trade signal like right up front. So that's why I don't even look at those charts anymore.
We have some. Let me see. So, Talking Monkey saying, "Ask Trader podcast if he ever uses trend. Seems like an index indicator, right up his alley." And then what else do we have here?
Let me look that up, man. I am always willing to learn trend.
Yeah, TRIN, and then
that's Trinity Capital.
Hold on here. What else we got? Let me see what I got here. David AMS chiming in. Now ride the wave to equal highs. David AMS at 12 o'clock saying he's flat now. I think you went flat at the same time.
Yep.
He's looking to buy the inverted FVG again, but need confirmation. And then I was asked, can you ask Trader Podcast to look at Google? That was from Pico0036 from the Discord.
Absolutely.
Can you ask Trader Podcast to look at Google, GOOGL? Not just the Goog.
So interestingly, so just looking at the chart right now, there is a lot of call buying happening, longer dated. So about 14.25 million in 0 DTE, 1 DTE call delta, but 42 million in all expiry call delta. So net that out, that's about 28 million in calls not expiring on Friday. So that's bullish in my mind. We're also below its hedge wall at 138, and there's plenty of room to the upside to 140. This might not be a bad trade. Let me look at some of its positioning.
Sellers losing control right now. Watch this closely here. Bulls trying to fight their way back currently. Trying to attack that upside supply.
So also, here's what's working for you in your favor. 40% of all puts expire tomorrow, and only 30% of calls expire tomorrow. And you don't have to worry about a gamma expiry till OPEX, so the 15th. You don't have to worry about gamma stuff till the 15th. So
this is on Google.
Yeah, that's Google. It's Google. Yeah, this is a good long. You know what? Let's see how much a 135 is for the 15th for.
So Pico0036 Trader Podcast is looking up a trade for you right now. He's saying that Google looks strong into the 15th.
Yeah, so 140s are $1.49 a piece.
Jimmy's saying that Google, Amazon, Tesla are the sleeping giants. I always like these trades. I always like seeing knockdown Mag 7 or knockdown movers in the market, and try. That's the only way you're gonna That's the only way you're really gonna outbeat the S&P 500 in my view. So that's that Tesla trade we've been talking about for the past week or so, 2 weeks. For that turn on Tesla to come back up and match up with the divergence on Qs and SPX. And then I would expect Tesla going back up to be the signal, one of the easy signals to look for the role in the marketplace once it rejoins S&P 500 and Qs. David AMS right now is saying, just watch the chart of any index between 2 and 8 p.m. That window is the central bank dealer range. That is the liquidity. Central bank dealer range, any currency, any index, and the time they do it is from 2 p.m. to 8 p.m. in a real-time check. Just chart that box in your chart and see the deviations they do. So you can see real-time liquidity injections. This is when that little hand comes out in the middle of the night or the middle of the day, right? And they just the silent hand in the marketplace.
Okay, guys, so I'm gonna open a trade on Google right now and hear this out. I'm gonna try and get a fill, or even if don't overrun me. I'm gonna sell a 140C for the 8th, and I'm gonna buy a 140C for the 15th. Sorry, I got distracted.
No, don't worry about it at all, man. You can do your thing, brother. You can take as much time as you need or want. People are very patient. People are asking you questions, and you're really taking the time out of your day to answer them. So I appreciate it.
No worries, no worries. So the reason I like that trade is I don't want to buy straight calls. I also want to limit my exposure, but I want to get a nice payoff. So this trade, I'm gonna try and get a fill. So it's gonna cost 67 cents a piece, and or 66 if you can get a fill. That's what I'm trying to get a fill. And its payoff is 125 bucks. So it's a 2-to-1 payout. And as long as the ticker goes up, you're good. And there's a risk. There's a pin risk here. There's an early exercising risk here, but you should be good. You might get tested. You might have to roll this, but I kind of like this trade a lot. So I'm going to get it. And I hope they fill me. So 67. So the trade is sell March 8th, 140Cs, and buy March 15th, 140Cs. So the same strike, but a week apart, and it should cost you about 66 cents for the trade, and the payoff is $1.27.
Are you catching that out there? Let me check right now and see if Pico0036 did Trader Podcast give you everything that you think you need here, or do you disagree with this? Do you want to say something in the Discord chat, and I'll relay it to Trader Podcast? You want to type something inside of the Discord, and I'll relay whatever you want to say. He's saying he caught it all, and he wants to say thank you very much. He appreciates your time.
Oh, no worries. It's my pleasure. So yeah, I kind of like that trade, just because I think even if it goes up a little bit, it'll pay me. Just have to kind of keep an eye out that you don't get run over. If it seems like you're about to get run over, that it's really about to take off, just close the trade. You'll still close for a profit, or close the short leg.
Exactly. That's what I like to do, is close legs on complex trades. The IB Crypto is saying sold Google 135 puts the other day. Easy move, easy money.
Yeah, that's right. If you have the bankroll to do option selling, do it on quality names, and do that. And you know what? I've been using a hedge. I've been selling puts on SOXS, so the inverse ETF for semiconductors. I've been selling puts on it. I've been selling 4Ps for like 2 weeks out, 3 weeks out, and I've been just farming 30-40% every time it's below $4. I sell a put, and every time it gets above $4, I close the put. I close the thing, and that's a good way to generate income too, without taking a lot of stress of day trading. So I'm open to any other tickers you guys might want to know. I like what's happening here, by the way, Jim, on the 1 minute trigger and the hour.
Yeah, they're trying to grind up into the supply and eat through all these. This looks like they're going to blast through at some point. It might take some time, but
however, yesterday
let's take a look above and see what's here.
I made bank yesterday, shorting every bump against the 5 minute trigger.
Yeah, the Discord was selling all the rips, buying all the dips, and then they ran the entire day. I ended up getting caught on one rip. I tried to take one trade to blast through, I thought we might squeeze up into the close, and I got caught in that one. I lost 8 cents, I think. But I did really well on Tesla yesterday, so I'm kind of like a wash day for me. I actually made money, but not a ton, but not a big-ass day for me. Let's see what you're looking at right here.
I'm just opening up a chart just to see what's going on. Yeah, see, this is
Did you give me this? I think you gave me access to this indicator, didn't you? Or one of these, or no?
I gave you pivots. Yeah, I gave you my indicator. And then there's another indicator I'm working on.
I should show that on stream one of these. One of these days on a slow day, we should go through and look at that indicator.
Yeah. So what it's basically doing. So right now I have the S&P E-mini futures up. Because I've been trading futures a fair bit. I'm not going to do any trading on screen because I don't want to get distracted. But it's a really cool indicator. It puts up all these ranges and pivots, and then I have a swing indicator that I've gotten off of TradingView for swing high lows. And then there is a machine learning algo that I've been using on a longer time frame, and it paints buy candles and sell signals for me. I'm working on it a little bit more, trying to fine tune it before like I really start using it. But I did buy this in the morning, this like giant squeeze up, and I've sold right around the way this is not today's. This is, yeah, that's better. I'm gonna show you, like, it painted a signal for me earlier in the day, and I ended up basically buying this candle and selling it like right here. So which was like a nice amount of change on ES. Yeah.
Right. Go ahead. Continue.
No, it's just that's something I'm working on, and then like I'll make, once the website is done and it's ready and the system is ready, I'll try and make these available for everybody else to use too. I like trading them. It makes the screen a little bit busy. I don't have the trigger on right now because of some technical stuff, and I'm sure I'll get it. Not wink wink cap.
Hold on, I've got some people. I got a whole bunch. I'm reading a bunch of stuff back here. So Pico said thank you. Thurston Howell III asked about is asking about XBI. Your thoughts on XBI? And Just John wanted to say that they took the Google trade. Can you please let Trader Podcast know that I said thank you if you get a sec? He filled it 65 cents. So Just John saying thank you. Thurston Howell III asking about, and this is all from the Discord. They're asking about XBI. So if you could look that one up, he'd appreciate that.
Definitely. And Cap, do you remember last time I was on the show in December and I talked about watch XBI and IWM? XBI is my trade. XBI has been my trade since since $73. Today you're seeing a bunch of call selling. This is monetization. It's above $100, guys. Like, it's run pretty hot. And today yields are a little bit up, so you do expect this kind of selling. But people are buying 1 DTE calls on it today. There's been 18 million of 0 DTE call delta. But overall call delta is minus 28 million. So net that out. That's negative 48 million of call selling. Sorry, negative 46 million of call selling that's happened today on XBI. That's, in my mind, it's monetization. Because just look where we are. And if we look at its put call impact, its call walls at 104. Look at this stick at 105. That's right up there. And the only reason 104 is right now the call wall and not 105 is just because of this little bit of put delta. I really like seeing that. There's definite room for upwards movement. Put wall is at 101, and which is also very, very interesting because that would be a dip to buy. Like, it dips down to 101, slam calls 2 weeks out, probably for 104, and you'll end up at 105, so you'll make some money on top of that. I do want to also caution that if You see this blue line? You see how it gets really steep from like 101 to like right about here, 99. That means if 101 breaches, it's going to be just because of the amount of put gamma that is here, it's going to get really whippy towards like 99 very, very, very quickly. So something to be cautious of. But they are selling volatility across the board. IV on XBI is high, so they're selling it, which is kind of good. Implied volatility at the moment is, that doesn't seem right. What's XBI trading today?
So sorry, I'm over here doing something else.
Okay. Yeah. So it's at 99 already. Yeah, this is a dip to buy in my mind. That's crazy. It squeezed up today to 103.40-ish almost, and then it's kind of given all that up. Towards the end of the day, I will probably be looking to maybe buy some calls 2 weeks out. So right, all this red down here tells me they're willing to sell puts on it. So it kind of makes sense from what we saw earlier. And lastly, let's look at the risk reversal. No, I want to look at history instead. There's more puts expiring next week, tomorrow, than there are calls by about 2%. It's not that big. How much is the put call ratio? Put call ratio is not that great. Yeah, it's okay. I would still feel good. I would want it to like stay above 99.13. If I look at my chart on XBI, Dixie keeps popping its head up, so that's interesting. On XBI, we are technically at max extension to the downside, just based on a 60-day look back, and where the edges should be. So this is kind of where we should see support. And I would like for this support to hold before entering a trade. I would like for it to get above 99.45 and kind of hold there before I plug in a trade for 2 weeks out. All right. Any other questions? Chop. 101 looks like negative Gex level.
Oh, we have one more that I promised I would ask. And I was just looking at the chart a moment ago. This is a good question. Someone's asking because I've been here. I've been stuck in a stock before, and it's no fun, right? I've got real good foods. I'm stuck in that trade right now, and so I'm gonna ask this one last one for you. Hold on here. Dat Lee on YouTube is asking about VFC. I believe the technicals have recovered. It looks like it's been consolidating for some period of time. Has gotten torched. I don't know if you can take a look at that ticker.
Yeah, I can see if what all is available. Let me kind of turn these off. Chart does look like it's consolidating in a fairly tight range. It's not. It's a $2 range on a $16 stock, so that's kind of not that tight, but it's good for volatility. Let's see a little bit longer. I'll have to draw some lines, but that just from that kind of looks like a falling wedge, and then it's going sideways off of it.
Yeah, I'd have to look at it.
VFC, right?
Yeah, I think I got this. I think I got this one right here. There's a couple. Let me see if I can bring it up.
I don't have data for that at all.
Yeah, let me take a peek here. Yeah, I like it here. I mean, I like it looks like the same kind of a thing here I'm looking at it right now, and it just looks like sideways consolidation. It looks like it's trying to wear out trapped sellers, right? It's you got that move right there. I can see it just right down here on for sake of velocity. Had a low back here in October. Just came off another low back here in February of 2024. And I think the assumption here is going to get one more drive higher and to the right. There's not an issue with this, but this is a 30-minute time frame. But just looking at it on a daily time frame, right here, the one issue that you have here on this ticker in particular is you've got trapped buyers from $84, and the expectation from them is, yeah, we're going to bring it all back. That's likely not the case. You might get back to 30. I mean, I'd be looking for first for 1753, and I wouldn't even be taking a long here unless you get some kind of a confirmation trade. I'm going to blow this up for you right now. Datley, I want to show you something here, okay? It's really quick here. Like fundamental, easy trading stuff. So this is a daily candle on VFC, right? They broke above the weekly trigger here. What they did not do is confirm the upside move. So immediately on that back test on the daily trigger, you need to see that new high right here to get confidence back. You'd see the daily trigger come up again, and then you would come off that daily trigger and ride that trade to the upside. So when you say anything out there like, I think we're done, or I think we're going to have a breakout and upside, you want to see this stuff here before you make that statement. Before you say, hey, I think we're done, you'd want to see this price action that I'm showing you right there. So let me draw it out for you one more time. If you want to take a snip of this, you're more than welcome to at home. So you'd see this yellow line would break above the orange line, right? You'd see the back test. So you'd start here with the green, right? You get the squeeze above. You always want to see the successful back test. So that's right here, right? And then the next part that you want to see is right here. You actually want to see this before you even take a trade. You don't want to see this roll. You want to see the breaking of a new high right here. And you're still not in that trade. You're actually going to take that trade on the hourly trigger. When that hourly trigger comes up over here, you can actually then enter your trade and say, hey, looks like correction's over, and we're going to start knocking out all of those previous highs, all of this stuff up here, the stuff at $22, the stuff at $25, the stuff at $29, and currently where we are, your price target is $30.68. So not $89, not $90, but $30. See ya.
Yeah, I know, but I'm not showing that screen. Oh, there you go. Wait, what?
Are you still free over there?
Dude, I think our
Oh, wait a minute. We're